lose. I'm like, oh my god. I was like, I'm like, so you don't go and cover your things? Like, no. You just play around with the settings and make them all lose. I was like, oh my god. I was like, let me out of here.
Yeah, I was asked by a broker many years ago, a rather large broker who was offering binary options and forex, and they said, "Can you do some videos for us?" So I took it upon myself to do a side by side MT4 and binary options on a few pairs. And first of all, I said, "Wait a minute, the prices are different. Why are the prices different?" I never really got a good answer for that, but I did prove it was interesting. I did prove that with the same analysis, you could actually make more money on forex than you could on binary options, and simply by risk management. And I think, if I remember correctly, depending on the payback, I mean, a lot of the paybacks on binary options, if you want to trade, you got 67% back or 80% back or whatever it was. On forex, it's the other way around. If you do your risk management, you could lose 1% versus blah blah blah. If you took the same trades on forex versus binary options, you actually would make more money on forex. And I was again on the B2B side. I remember one London summit years ago, and one of the binary options companies was explaining to a whole room full of forex brokers, what it was all about and revenue sharing and so forth. And one of the brokers in the back put his hand up and says, "Well, how does our risk management work?" And the guy said, I'll never forget this. He looked at the audience and says, "What risk management? They're going to lose." So that's what he said. And he said, so he realized right then and there, you're not in forex, you're in gambling. So this is, as you know, the regulators for years struggled with these two concepts. And then he said, well, actually, wait a minute, you can manage it. You just actually alter your level of capital in the accounts and things like that. He wasn't talking about fiddling, but he was clearly talking about a gambling product, which is why it no longer exists in our world. More to do with the fact that the mis-selling of the product than anything else. So
yeah, well, we're coming to kind of much simpler times in terms of people don't want to think; they just want to know the right answer. Gamification is, I guess maybe binary options was ahead of its time with gamification, but that's really where a lot of the trading markets are heading is, can you gamify it and make it kind of easy and fun to do? And that's definitely takes a page out of the gambling side. And now you're seeing a lot of that just happen with the crypto space, where I saw a notice the other day where Norway said, we don't regulate crypto, so anybody who's saying they're regulated in Norway it doesn't exist, and it's false. So
right,
yeah. Well, I'm sure that was fun for you, Vlad. What are I guess I'm going to throw this one at Vlad. What are alternative asset classes?
Yeah, I mean, subjective, right? I'll give my subjective opinion because I think it's like open-ended. But if you look at anything that's traditional, like stocks or bonds, I'm also going to throw property into the traditional side. I know it can be seen as alternative, I suppose. Anything on the other sort of side of the spectrum to that, I suppose it's difficult for me to decide because I always have arguments with regulators and compliance officers about what is an alternative asset class. But essentially, in the eyes of compliance people outside, it's something that's illiquid, something that is sort of like traditionally meant for high net worths, something that sort of promises high returns to traditionals, and something that, it slipped my mind, but anything like private equity, forex, commodity trading, cryptos, I suppose at the same time, that's all alternative asset classes, venture capital, anything that sort of is deemed harder to get into, in my mind. But the way that I would sort of like deem an alternative asset class, and sort of like what we alluded to, what Cypher does, is we look for anything that's uncorrelated to traditional assets. So anything that has a negative correlation actually to stocks or bonds. So we don't want our strategies or our portfolio mixes to be affected by what's going on in the world of stocks and bonds, meaning that if you allocate a certain portion of your money to an uncorrelated alternative asset class, it shouldn't experience the same trajectory as sort of like your stocks or bonds property portfolio would in an economic downturn per se. So that's how I would sort of define alternatives. But yeah, like I said, I have arguments every day with compliance people about it, so I don't really know what a good answer is. I don't think forex is inherently risky. I don't think cryptos are inherently risky either. Like I could put my money into to a stock portfolio and lose 40% of it tomorrow. There's absolutely nothing that will guarantee me my capital. So it's a little bit all over the place in my mind.
Yeah. I was gonna say, yeah, forex is pretty liquid, but I guess what you mentioned there, the potential to lose all the funds just because of using leverage. That's if it's unleveraged, it's less risky. But when you use the leverage, that's where it becomes pretty risky.
Yeah, I mean, yeah, I suppose. I mean, it depends who's managing the trades. Yeah, you know. So that's why I say like a stock standard generic answer of like forex being high risk or cryptos being high risk is totally, I think, wrong in my opinion. I think it gives people the wrong impression. Or the scams give people the wrong impression too, I suppose, and the whole regulations and what you touched on with the brokers as well, and guys like complaining about being booked or trading on balance sheets and all that kind of stuff. I think it comes back down to the individual sort of capacity. Yeah, but I'm sort of getting off track here, I suppose.
Oh, we can go on any track you want to go. So
Yeah,
that's fine.
we make our own track. How's that?
Yeah, exactly.
Yeah, I've spent too many hours in boardrooms trying to convince compliance people why FX is not risky. So I'm a little bit passionate about this. I've been shut down every time, just by the way. So
Have fun, man. You gotta check the boxes. You gotta ask them, like, you just gotta say what boxes do you need to check, and then you can figure out how to explain what to cross off for them.
Yeah, I mean, still.
Compliance is does it check the boxes? Does it fit inside the box? If anything's outside the box, it's not gonna work.
Yeah, I think like I'll only comment on South African sort of regulations because I don't really know. I think offshore it's a little bit more like forward thinking, but here we're so I suppose archaic is or like antiquated is maybe like the more correct term in the way that we think. We're years behind, man. So it doesn't matter what you show people, they'll still go the old-fashioned way, or they'll put all their money into a scam and they'll lose. So we don't have a good middle ground here. It's like it either goes one way or the other.
That's the problem. You can be honest to clients, and then you can tell clients what they want to hear, and they're always going to buy what they want to hear, and not what's the truth is. And it's that's the frustrating part, especially like when you're an honest business person. So
Yeah, there's still a lot of brokers who are